Hello everyone, this is Thanakwant, and today I'm gonna go through a very special analysis. But before that, this is my X page. Follow me on X. But let's talk about domino chain. So we saw that the market kind of went down and then came up, and like you would be thinking, what's gonna happen? I said that it's gonna be sideways movement. This is expected. People kind of selling out, but for kind of prints in money. But if you look for a period of time, Iran is not a small country. It's a very big country. So what can happen is if there is a long sustained war, similarly to how Russia and Ukraine is going on. So the very first thing, so the Iran strikes, we have seen that Ras Tanura factory was hit and Qatar Energy was also hit, which is like one of the LNG and one of the petroleum plants. These petroleum plants does not just come overnight. If a strike has happened, it would take significant amount of time, and also no one would be working over there because they would be thinking that Iran might strike that again. So that's one of the things. Hormuz still it's closed. Iran has closed all tankers. 70% of them has completely halted. So again, what that triggers is the oil. 120 to 200 barrels dollars per barrel. That's like is a significant amount. So that's what I'm gonna quote in case the war kind of brings in and how it leads to Taiwan Energy. Why I'm calling it Taiwan Energy because NVIDIA has overpromised and a lot of AI stocks have overpromised. If oil is not there, there is no energy, and then how will TSMC kind of make chips? If TSMC will not make chips, then we have like this photonics stock. Photonics also play a very big thing for NVIDIA. That's why we see that NVIDIA kind of went down and up. And this is going to happen. But what I'm saying is the 660 billion capex that people were talking about that can't deliver. If the strike's going to continue, and I'm going to break it down at each stage. Let's say there is a partial disruption, there is no de-escalation. The market pricing in the 75 to 90 degrees per barrel of oil change. If there is a full closure, airlines are basically, like not working. The very first thing is it's gonna get crushed. Every airlines, United, Delta, whatnot, if the pipelines are not activated, these are gone. The very first thing. If there is a full closure for at least a month, there could be a chance of global recession we are talking about. It's not something that can move out of picture. And then there is an infra damage. 3+ months, that's not going to happen, but anything can happen. It's war is always non-linear. No one knows what's going to happen. But JP Morgan 25 days, the short is beyond 25 days. Gulf storage capacity fills completely. Middle East producers basically set in production. Non linear price moves begin. Bypass handles 3.5 million barrel per day, less than 20% of the normal Hormuz flow. So that's basically it. If a Gulf storage capacity fills completely, then still there is a lot of things. So what has been overpromised? The very first bear trades is ARM. It's trading at 169x, forward PE 64.7. They are not gonna deliver. It's just at 11% short interest. There is gonna be more short building up, and definitely they are the first one to get affected. Then there is SMCI. Right now, the trailing is 20 to 25x PE, 15.3, but because of the government's crisis and they have very thin margins, they are going to get absorbed in that bloodbath. American Airlines, again, one of the things, their net income has will go down because no one will be traveling. And then there are like different other trades, and all of these trades you see like what are 3 stars, 5 stars, SMCI, AAL. These are like the main ones you should focus on shorting if in case nothing happens. But the main concern over here is photonics. What is photonics? What is indium phosphide? This is basically the brain. Like AI runs on GPUs, and indium phosphide is what makes the signal possible in first space. Why? Because every laser in the optical transmitter, it runs on InP. Silicon can route through light, but it cannot generate it. So there is no substitute at 800 gigahertz, right? So these kind of wafers, China controls most of the Indian refining and exposed licensing. If any disruption is there, you can see that how AI is gonna stop. So what is the playbook? This is the hidden alpha, guys. So we saw that LITE, AAOI, and COHR. AXTI, all of them were like bullish, right? Because of the supply chain disruption, and then NVIDIA kind of coming in because that is the absolute bottleneck. So if that is the bottleneck, like you can see like whatever is the five-star things, I would definitely recommend you to buy AXTI. You can buy, but these three are the major horses that's going to run even further. So what is the valuation gap? That is very important, right? So what light prices, AQI, and then different other prices, what are they leveraged on? And then what is their key advantage? You can see like I have made it down all there, and what is the key risk? Light is already trading on 200 PE, so that's there. But AOI and COHR, so these are like different things that you can still think about as profitable and can buy. AXTI has Chinese export permits negative, reaching fab depends on China cooperation. So these are definitely you should have a look on because photonics are the nerve of AI, and this sector is going hard right now, and this further leads to quantum. Quantum is the next thing. What are the crisis beneficiaries? I've I think already gave them out. Devon Energy, Cheniere Energy, they all went up. Constellation, Newmont, Lockheed, and ExxonMobil. So these are basically it. So these are the bulls. These are the photonics, and all of the photonics kind of ran up 20%. And this is the final bears. So congratulations, guys. This is the trade, and don't miss it. Do not overtrade. Just first think about what the market's going to be. Sometimes we are making it very complex, so just try to be an easy one. Thank you so much.